Hey, what's up everyone? Trader Tim bringing you another Monday market analysis. Today is Monday, May 12th, 2014, and I'm actually recording this video in the morning. It's about 9:30 Central Time, and so we've got some live market action here. And on the ES, this morning we broke out of the recent high we had back here on the 2nd of May, and that's important because it helps confirm the long that we have below us at 1842s, a halfway back long that takes us up into that 1900 level that I talked about last week and a couple weeks before that as well. If I zoom out just a touch, you can see this other drawing I have here that you've probably seen and have on your charts, that 1810 level that has a target, a negative 23% target of 1924. But the more immediate one, the 1900 level, we should be able to hit that this week. Aside from this little swing high we just broke, the only other resistance in our way is 1892.50, and that's the previous high on the ES, and that's, that shouldn't really act as much resistance. We have a nice strong move here Monday morning, and we should see some follow through up into this 1900 level. In the meantime, if I've got the YM open as well. We opened up this morning, kind of pushed higher, or we gapped up and then pushed a little bit higher, and so far we're stuck in the first half hour's range. So if you notice, I've marked the high and the low that occurred within the first 30 minutes of trading when the NYSE opened, and we're just trading within that, and that's a place that tends to be fairly choppy. It tends to not really provide many setups. So every day when the market opens, I always mark the high and low of the first half hour and see how quickly we break out of that range. One trade setup you can use is to mark the high and the low and put a buy stop and a sell stop above the high and the low. And once the market breaks out of that, it gets you in the trade, and then if you're looking at the YM, I just have a 3-minute chart here. You can just trail the 3-minute bars like I talk about with the breakout method. So that's one option for getting into the trend, because the first 30 minutes is usually either strictly directional, meaning the market opens and we have straight trading in one direction before pulling back to either a 50% retracement or a reversal. Or the other scenario is we gap up and we don't go anywhere, as a little bit more common for a Monday. So even though we drifted a little bit higher this morning, the gap up did produce most of the move, and then this sideways action that we have is all contained into the first 30 minutes of trade. So just something to keep an eye on. You don't want to get chopped up in the first 30 minutes, or even the first hour, rather, of trade, because it's typically a tight range. In today's case, we go from 92s on the YM up to 46s. So only a 50-point range on the YM, which is not that big, especially relative terms when you consider the gap up that's already happened. So not seeing many other trade opportunities in terms of intraday for probably the rest of the morning here on the YM or the ES, unless we can break out of 647s and start pushing higher. If I go over to a couple other things of importance, the VIX has broken down to below the almost the negative 23% target if we drew from highs to lows, and this was back in February, and we talked about how the volatility index kept kind of coming up to that mid to upper teens, that 1750 level, and then selling off back down to, or pulling back down to lows. The market would rally and the VIX would start to fall again. And then the same thing, came up to that 1750 level, market rallied, and the VIX fell. I could even draw another retracement within this retracement that we're almost touching here. But as long as the volatility index stays down in the low teens, that's 13 and below, I would definitely. I mean, that confirms the upward move. So whenever we have a breakout, we want to look for the volatility index to break down. So the market gapped up today, the volatility index gapped down. And when the market sells off hard, we want to look for the volatility index to spike. And so the two, while they work inverse relationally, they have an inverse relationship to each other. We want to make sure that they are conforming and acting in the same relationship. So we want to see that when the volatility index is going down, the market is going up, or vice versa. And when the market is selling off hard, we want to take a look at the VIX and make sure that the VIX is rising in the same fashion, so that the we want to see that the VIX is breaking its swing lows as the market is making its breaking its swing highs. And so that just adds some confirmation to the price action. Couple individual things I wanted to look at. Gold, which we've talked about a couple months back, but I just wanted to revisit gold here. You can see that we're in a very large triangle pattern. We've kind of pulled back to its 50% at 124 and just kind of sitting around this level. But if we can break out of kind of this 125, 126 level, and again start taking out some of these swing highs, then I would look for us to pull back into a smaller retracement, and then use these swing highs, kind of this 126 level, as support for kind of a trampoline, a launching a launching pad to take us higher. And the last one is Apple, and Apple is sitting right at its 50% retracement. If I zoom in a little bit, earnings last week, or a couple weeks back rather. No, I'm sorry. Yeah, it was end of April when we had the gap up and we broke the downtrend line, and then was just waiting for a retracement up here at the from the gap up to highs, and we had that on Friday, and that's taking us with the target up to 611s. So looking for Apple to break highs and to kind of help lift the market as it does, as it so often does, because it has so much pull. Some of these bigger names, Apple, Amazon, Netflix, Google, when they get into a trend or a reversal, they can be a catalyst for a lot of the other markets and a lot of the smaller companies out there, smaller stocks that just kind of get lifted as these bigger names rise up, and conversely, when they get hit hard and sell off, then they can kind of weigh the market down as well. So that's what I'm looking at this morning. Again, for the intraday stuff, not a whole lot going on, I don't think, for the next hour or so, just because we're kind of stuck in this first 30-minute window. But looking bullish from here, and as you can see with the ES, inching closer to that 1900 level, and we should be able to hit that this week, and then we can go into the next retracement from this low to whatever those exact highs end up being. And you can kind of forecast out, if you will. Let's say we break highs and maybe go a touch higher, and say we go up to 1915. Well, then the next 50% retracement would line up with the 1880s, would line up with this this nice kind of prior resistance level. And so now you have a nice support level for the market to pull back into and bounce off of. So not only are we looking at a 50% retracement, but what does that line up with in terms of support and resistance and other things that are just happening within the chart? So not only will you have people buying hypothetically here at 1880s, but you'll also have people buying because for one, that we have the 50% retracement, but for two, that we have the support level. So when you have a couple of these levels line up, it can really add some fuel to the fire in terms of really sending the market higher. And that rhymed. So I hope you all have a great week. And if you have specific questions, again, feel free to shoot me an email, tim@eminimind.com, and I'd be happy to answer them. Take care.